Hello, welcome back. This is Seewing Yi, and welcome to another episode of my video presentation on the housing market. Before I will go any further, toward the end of this short video, if you see value on this video, please smash the like button and subscribe to my YouTube channel. With that said, let me share my screen and today's topic. I'm going to talk about two things. One is the updated Redfin report, and first, however, I'm going to share with you the Mortgage News Daily. The good news about the mortgage rate is that, according to Mortgage News Daily, the 30-year fixed rate mortgage as of today, 12 January 2023, I believe, a few days ago, the 30-year fixed rate is 6.09%, up 0.02 basis point from a few days ago, and VA rate is below 6%, 5.72, and the FHA rate is also below 6%. So I love this threshold. Imagine what I'm looking for is the 30-year fixed rate approaching below 6%. No one have a crystal ball, but what if this first quarter of 2023, the 30-year fixed rate mortgage goes below 6%. I believe this is a very, in fact, I believe this is a very good psychological motivation, right? It means, just when you're shopping for anything out there in a shopping mall, the psychological aspects of changing one number to the other. So this difference between when you buy a home, the realtors they list the price at like 699,000 instead of 701,000, right? The few $1,000 difference between 699K and 701K is a very interesting sales dynamic. So knowing that most people are they're very emotional. Most people out there. So if a mortgage rate finally can dip below 6%, what if even like 5.99, and if the rate stays at below 6% for this 2023, who knows? We may see some positive consumer confidence, a psychological edge. We may see some triggering of motivation. We may see people staying to get off the sideline and start buying. So it may have a leverage multi-layer effect in people's the way from a negative thinking into a positive thinking. It's good sign. Not only that, if I could continue with the mortgage rate scenario, not only the mortgage rate has been trending down for the past few months. Imagine back in October 2022, a few months ago, the mortgage rate, 30-year fixed rate mortgage, was like mid-7, like 7.3. Now the rate has been trending down. As you can see right here, this article, rates are at a 4-month low since October. But then, the Federal Reserve are giving us mixed signal. But the good thing about it is the inflation. If you look at the inflation numbers are really are going down. So the Federal Reserve, they if the inflation or gets lower, then they're gonna ease their interest rate hikes. So things can only look very, very positive moving forward. Look at this. Look at the CPI, Consumer Price Index. As you can see we have been seeing the Consumer Price Index, is AKA inflationary type of numbers. If the CPI get further and further reduced, as you can see on this chart, that means it's a very, very positive sign. Then if that's the case, then you will also see the 10-year U.S. Treasury, the 10-year, the mortgage rate rise and or lowers based on the 10-year U.S. Treasury. The mortgage rate does not rise just because the Federal Reserve are raising their, hiking their rates. So just bear that in mind. So you need to follow the inflationary. The inflation has, it has been lowering. The consumer price index report has been lowering, as you can see, right? You can see the trends. So the trends are looking really, really good. But then again, no one knows or no one can predict the future. But this is a very good sign that if we reach a mortgage rate below 6%, what if the mortgage rate for the rest of 2023 hopefully gets to the mid fives or maybe at 5%? At 5% mortgage rate, I truly going to see there will be potentially a frenzy, buying frenzy. So with that in mind, let's segue into the Redfin report, which is the basis of today's presentation. So this Redfin report came out a few days ago, January 13, 2023. And it says housing market update. Sales are slow to kick off the new year, but more buyers start searching. So this is a very good positive headline. And you know me, I love to report positive headlines. I'm not like most YouTubers out there, all clickbait, all negative headlines just to pull in subscribers. So I have more ethics, I have more morals. So I can only share my presentation based on my 30 years of real estate investing experience, and also guiding my real estate investors for the past 20 years, provide personal counseling to my real estate investors to buy in a good entry-level markets in the South and Southeast for cash flow, turnkey properties, investment properties. So, suffice to say, I have gone through several real estate cycles. So I know the up and down of the cycle, but long term, you will do well. History will show you that if you buy and hold long term, regardless if it is a owner-occupied home or a real estate investment property, if you can buy and hold for the long term, you can overcome any kind of short-term challenges, including today's challenges as we all are experiencing as we move into 2023. So with that in mind, let's go through the article, my yellow highlighting. The reference says that pending sales are a record low. Look, people have this really misleading information. All the headlines in the past 9 months indicating, sales are down, pending sales are down, nobody is buying. Percentage sale, 20, 30%. Sales are down does not mean housing prices going down, same in the same numerical way. It just doesn't make sense. So you have to be careful what kind of sources you're watching. Who are the sources that are telling you this very inaccurate information coming out of the wild west of YouTubers and YouTube channels anyway. All right. So pending sales are down, yeah, but online home searches and tour requests are ticking up. So, look at the trends, look at the data. Those early signs of demand could translate into sales, especially as mortgage rates fall from their peak and inflation cools. All right. So pending sales dropped 32% year over year. From 2022, from 2021 to their lowest level on record, and mortgage purchase application dropped to their lowest level since 2014. I know the past 9 months, the rates has skyrocketed tremendously, so they're causing a demand to subside, which is very, very obvious. But again, we see inflation coming down, and we're seeing the Federal Reserve are hiking their rates more slowly, easing up in the hikes, and then the mortgage rate hopefully will continue to little by little to go down. Then we're going to have a much better consumer confidence sentiment out there. So pending sales have dropped to 32%. I don't look at this numeric number as a negative. I look at sellers are not selling because they lock in their rates at such a 3% rate. Why would they want to sell from a 3% rate house to move up to 6% or 6.5% rate house? It does not make sense. So sellers are not selling. The builders are not building newer homes. And there's not enough homes to buy and the demand has subsided tremendously in the past 9 months. Therefore, obviously, pending sales have dropped year over year. So that's nothing to be concerned about. There's no housing crash, nothing like that, because the supplies of homes are still very, very low, historically speaking, and there are pent up demand, especially if the mortgage rate falls below 6%. Only time will tell. So the early signs of early stage demand is up. The Griffin agents throughout the country has seen a 6% increase over the last month, and Google searches for homes for sale are on the rise. As we see, the mortgage rate has dropped down to below the mid sixes from the peak of 7% a few months ago, and roughly saving a typical home buyer around $250 per month on housing payments. So buyers are also encouraged by signs of improvement in the economy. The job is doing well. Inflation is easing in December for the 6th straight month, and as wage growth softens. And here's a quote by Griffin Deputy Chief Taylor Marr. He says, "We're entering 2023 with positive economic news. The latest Consumer Price Index report confirms that the worst of inflation is behind us." Wow. That means the Fed is likely to continue easing its interest rate increases, which should cause mortgage rates to continue gradually declining. This could bring back some home buyers in the coming months. Wow, that's a very good sign. However, there are still some negativity out there. Home prices fell from a year earlier in 20 of the 50 most populous U.S. metros. The typical home price sold during the 4 weeks ending January 8, 2023, or $351,250. That's up 0.08% from the year earlier, but down about 10% from the June peak. Yes, nationwide, home prices on the average nationwide, everywhere, different. Local real estate is very hyper local. So in your neighborhood, it could be very, very different. So to paint the broad brush of a nationwide analysis, yes, home price has decreased 10% over the past since June. So we're talking like 7 months time frame. So anyway, home prices have decreased in 20 of the 50 most populous metros as tracked by Redfin. There are more metros than that Redfin have not tracked, so this is not a all-comprehensive data analysis. The typical, you've seen these before the past few months from myself or other resources. The areas in the country that dropped the most are in the very expensive metros, like in California. Well, here it is. In San Francisco, where I live for the past 30 years, there are some, double-digit home price reduction in the past 7 months, and 5% in Seattle, almost 5% in San Jose, 4% in Austin, Detroit, Phoenix, Oakland, Boston, LA, Sacramento, San Diego, Chicago. So mostly in the West and the Pacific Northwest and parts of Northeast, where we have seen some price drops. But then again, 20 of the 50 metros have dropped price declines. What about the other 30, the remaining 30 most less populous metros? You could make the argument they have their prices have increased, or something that Redfin did not talk about. So I'm curious to find out. 20 of the 50 most popular metros has price declines. What about the other 30 remaining metros? Are they growing? Are their prices increasing? What? So I may need to do some more research. So that just goes to show you, real estate is local. Some areas are doing well. The areas are doing well, in my vast experience, are in the Midwest, U.S. in the Midwest, and in the South and Southeast, especially in Florida and South Carolina, North Carolina, and Georgia, pockets of Texas, like San Antonio and outside Austin, like in the suburbs of Austin, have done well. Also, although inside Austin is going through some major correction, no surprise. But the other, fast-growing metros like in Texas, like Dallas, San Antonio, and Houston, are doing very, and in the suburbs of Austin is still doing very well. So let me see what else. Let me see what other highlights are right here. Leading indicators of home buying activities. I kind of went over that. So let's go over the key housing market takeaway for 400 plus US metro areas. The median price of newly listed homes was $352K, which is still up almost 4% year over year. So we're still getting some modest price gains year over year. So it's not doom and gloom. The monthly mortgage payment, the average $22.63 per month. But since the rate has gone down, the average mortgage is down by $244. Pending home sales is down almost 32% year over year, 12 straight month. So, like I said, not enough homes for sale because sellers are not selling, builders are not building enough homes. So we're seeing some steady declines of housing supply. So that makes this market very interesting moving forward. So months of supply right now is nationwide on the average around 3.8% month of supply, up from 3.4% a week earlier, and up from 1.9 months year over year, 2021. I've said this many times, it's very hard to compare to 2021, because 2021 has been a historical year, is an anomaly. It's not historic numbers. So for me to compare 2020 or 2023 or 2022 to 2021, it's just it's such a small sample size, because 2021 has broke all the historical records around real estate and the housing market. So it's quite misleading to manipulate the numbers and to overhype the negative headlines, comparing historical records, record breaking to 2021. We would never see in our lifetime, in my belief, 2021 occurring ever again. This historical year is the exception to the rule, etc., etc. Get it? 27% of homes went under contract, had an accepted offer within the first 2 weeks. So not bad. 1/4 of the homes are still selling well because the seller know how to market their homes. They know how to prepare the homes. They know how to price it, realistically speaking. And the house is nice, whatever, is bringing buyers. So still some pent up demand in various parts of the country. It's not all doom and gloom. And also homes that were sold in the market had a median price of 44 days. You're thinking, wow, it takes so long? No. Compared to 2021, historical real estate boom year, I mean, nothing compared to 2021. So 2021, like, take 18 days to close, to sell a home, but that's anomaly. So 44 days from a historical perspective, pre-pandemic, is pretty normal for a home to stay on the market that long, 44 days. 22% of the homes sold above their final list price. Again, some homes are still selling well, although that's 1/4 of homes have sold within their final list price, and while others have to decrease their home price maybe 2 or 3% from the final list price. So anyway, so let's finish up with the graphics. Median price have increased less than 1% year over year, as you can see. In the middle of the year, we have seen some double-digit appreciation nationwide, but since the rates have gone up so much in the past several months, and we have seen price reductions throughout the past 7 months to a point where year over year, from 2021 to 2022, we have seen no appreciation, or in some cases, slight negative. So it's not, you shouldn't freak out about that, especially if the mortgage rate continuing to gradually slow down, then that will stimulate more demand and more housing buying frenzy could occur. Who knows? First quarter of 2023, second quarter, third quarter, but I feel very positive about it. Okay, so median price is asking and went up almost 4%. So people that bought in the past few years, they have done well, as you can see by this graph. So we're still seeing median price increase year over year, even as we speak this past year. So home mortgage payments was increased by 32% because you, instead of paying the 3.5% on the mortgage, you're paying 6.5%. So that's why the demand has been lower because of the home affordability and the skyrocketing of home prices in the past 3 to 4 years. Pending sales, as I said, is minus 32. That indicates that there are not enough homes out there to be purchased. That will only exacerbate the low housing supply that we already have in the past 10 or so years of a slow construction and what have you, a high demand and low supply. So new listings, people are not listing their homes, especially during the holidays, seasonality kind of thing. So that's to be expected. 22% less homes listing from on 2022 versus 2021. So I think 3.8 months of supply. A healthy market is anywhere from 5 to 6 months is a balanced market. So technically, you could make the argument that right now at 3.8 months supply of homes, still technically a seller's market. Also, some of you may disagree with me. It all depends on your specific local markets, but nationwide, according to Redfin, 3.8% monthly supply is still very low on historical basis. There's not enough homes to sell, especially when we see all this very steep decline in pending sales, right? We've been getting this kind of information for the past 6 months. So this kind of trends speak to a point where, if pending sales keep on decreasing month over month in the past 9 months, 28%, 30%, 40%, and the builders are pausing construction because of the lowering of the demand, the consequences of low new construction homes for sale in the next few years, and versus the current homeowners are locked in at their historical low 3% interest rate. They're not going to move, right? They're not going to move. They're going to lock in unless they need to have a reason to sell their homes, and they're not going to sell their homes on a 3% fixed rate for 30 years into a 6% home, move up and having to pay a higher price. It just does not make sense. So remain to be seen what's happening. So the recap on this video is such that I see some positive trends. I see the mortgage rate coming down, inflation coming down. The mortgage rate could decreasing, so that will create more buying frenzy. So the spring season each year also creates a lot of motivation for people to buy. This is the time of the year that people start feeling positive about it now that the holiday is over. So, and the economy is doing well, and so inflation is coming down. So we're seeing a lot of positive signs, and lack of homes to sell. The pending sales keep on coming down, and so more positive signs and negative signs. That's all I can say. So time to pull the trigger for a lot of people out there, whether you're first-time home buyers or whether you're real estate investors. Time to pull the trigger, invest for the long term, all those kind of things. All right, thank you so much. If you see a lot of value on this presentation, please smash the like button and subscribe to my channel, please. And also log in your email into our email newsletter with my website below, so you become part of our real estate investing community with the Yield Real Estate Network, so you can receive weekly email free newsletters about real estate investing. Thank you so much. This is Seewing Yi. I will see you on the next video. Have a nice day. Bye bye.